The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Can everyone see my screen and hear me? Great, thank you, Howard. Let's begin. Today is Thursday, February 23rd. This is the Elliott Wave beginners video. We'll be providing a detailed coverage of Avi's nightly market update, taking a look at the S&P 500 chart. What we'll do as we have been doing, looking at the action from the 2009 low. This provides us with a really good real-life example of a Fibonacci Pinball impulsive structure for a larger impulse. And so we'll take a look at that. So when in Elliott Wave, when we're, all these extra lines are here. When we're talking about a trending move, we are the theory is that trending moves will tend to subdivide into 5-wave movements, and the corrective action will tend to subdivide in 3-wave movements. So we have a much larger trend upwards in the S&P 500, and we had a 3-wave move into the 2009 low as a larger cycle 4 correction. And so we've been looking for a movement in the cycle 5 off of the 2009 low. So as the larger degree structure has been impulsive, our assumption about the wave 5 was that would shape up impulsively. And you can see here that we have a nice 5-wave move for this cycle 5, or Roman numeral 5 here. We have a 1, 2, 3, 4, and 5-wave structure. Now, in terms of where these particular waves fall, this is something that we deal with here in Fibonacci Pinball. I'm going to zoom out on my daily chart back to the 2009 low. Sorry for all these extra lines here. Okay. So what we're looking for is an initial 5 waves up that exceeds the wave 4 of C of the corrections high. So we get our C wave down, this circle C, to finish the correction off of the 2007 high into the 2009 low. And the C wave is a 5-wave move. And so what we're looking for is an impulse that takes out the wave 4 high. So we got that off of the 2009 low into the 2010 high. And then we get a pullback on our wave 2. From there, we are looking for a 5-wave move for the wave 3, and we're looking for each portion of it to subdivide as a 5-wave move. So we get our initial 1, 2, and what we do is we take the measurement of that initial wave 1 and extend it up from the wave 2 low, and we have our first target region here, the 0.382 to 0.618 extension of the initial wave 1, and that's our target for the wave 1 of 1 lesser degree. Another way of putting that, as this entire circle 1 here is what's being measured, is that our wave 1 of 3 is expected to be somewhere between 38.2% and 61.8% the length of the larger wave 1. Then we pull back in wave 2. Our wave 3 of 3 targets the 1.0 to 1.236 extension. And what that means is waves 1, 2, and 3 of wave 3 are expected to be equal in length, or 123% the size of our initial wave 1. We get our pullback in the 4 of 3, and then we get our 5th of 3 higher up to the, our standard target region for this is the 1.382 to 1.618. So that means that our third wave is expected to be 38.2% to 61.8% larger than the initial wave 1. We get our next consolidation in the overall wave 4 off of the 2009 low, and then we get our 5th wave higher. So you can see that structure here plays out at all degrees. We have our initial wave 1, we have our wave 2 pullback and consolidation. We have a substantial move up in the wave 3. When we're dealing with an impulse, wave 3 is very much the longest and strongest part of the overall move. And you can see here it subdivides into a 5-wave structure. And then we get our 4th wave consolidation and our 5th wave higher. You can see that fractal of sorts exists at all degrees. We have sort of the same structure here inside of the 3rd wave, where we have our wave 1. In this case, we have a deeper wave 2 pullback. Then we have a big extension up in the wave 3, a wave 4 consolidation, and our 5th wave higher. And you can see that even to a smaller degree here in the 1, 2, 3, 4, and 5 of the intermediate, or parentheses, 5th wave there. So after our wave 1, wave 2s tend, what we describe as the standard retracement is the 0.382 to 0.618. That said, there is not a rule that this price has to come all the way down to the 0.382 retracement. This would be this zone here. And similarly, price does not have to hold the 618 retracement. You can see, for example, off of our initial intermediate wave 1 of 3, our wave 2 came all the way down to the 0.764 retracement. That is deep but valid for a wave 2. Technical invalidation occurs at if price were to break beyond the 100% retracement of a wave 1. When we're dealing with wave 4 retracements, we are looking for price to retrace somewhere between 0.236 and 0.382 of the 3rd wave of relevant size. In this case, into the 2016 low, we got a very shallow wave 4 down to 1813. Again, our support region here is here, the 0.382 to 0.236 retracement of the wave 3. And it's ideal that price does hold that 0.382. If we do get below the 50% retracement, it's not an invalidation, but at that point it really becomes unlikely that price is going to continue up as the greater impulsive expectations would portend. You can see we see some charts with extended 3rd waves where our 4th wave comes down, just sort of gets a bit below the 50% and then reverses. But your technical invalidation of the impulsive potential is any overlap between waves 1 and waves 4 of similar degrees. So for example, if price were to overlap all the way here from this 2015 pullback, had we come all the way down to 1337 there, that would have been an invalidation of the impulse, as wave 4 and wave 1 would have overlapped. But we get notice sort of much sooner than that if price is not holding our 50% retracement. And really what we want to see is, you can see a little bit of a break below the 382, but ideally the 382 holds, etc. Same thing holds with our larger degree 4th wave here. So we measure the length of the 3rd wave here, and you can see that though this was a big crash in real time, especially because we had a very expanded B wave here for this correction, we can see overall that price came down into support to that 236 to 382 zone and then reversed upwards from there. Now, why is this move here, the higher high in February of 2020, considered a portion of this wave 4 rather than an extension in the wave 3? Well, we have enough subwaves already in the wave 3 for one. And then also we have a 3-wave move down. Keep in mind, so when we're dealing with corrective structures, wave 2s and 4s are 3-wave moves here. You can see here, for example, our bigger cycle degree wave 4 subdivides as an A, B, and C. We get an A, B, and C. The A waves typically subdivide as 3-wave moves, so that's a smaller degree ABC. Our B wave subdivides as well as an ABC move. and our C wave subdivides as a 5-wave move. So you may see this referred to as the 3-3-5 structure that we expect to see for corrective waves for the wave 2 and wave 4 of an impulse. And so in this case here, though we made a substantially higher high, B waves can make higher highs. There's no rule against that, and this move counts better as a 3-wave move. And then price came down at this degree, at the weekly chart. You can't really see this as an impulse. It really just looks like a straight down, but straight wave move down. But we zoom into the daily chart, you can see we have a 1, 2, 3, 4, and 5-wave structure into the 2020 low there. So from the 2020 low, we had what counts nicely as a 5-wave move into the September 2020 high. We got a running flat pullback as an ABC into the late October 2020 low. And from there, what we were looking for was a move up into the 1.382, let's see, 5160 to 5500 region just for the intermediate wave 3. So we were looking for this to develop like so, as a 1, 2, 3, 4, and 5. And why were we looking for that? Well, after we have our 1, 2, our wave 1 of 3 is expected to target the 0.382 to 0.618. We got this move here into the 0.500 extension. We got our wave 2 pullback. Then we got our move into the 1.0 to 1.236. That's our standard extension there for the 3 of 3. And then price dipped into our larger wave 4 support in the 0.618 to 0.764 extension zone. But after a few attempts of failing to break out, price did break down below that support, at which point most bullishly we could consider was a three waves up, and price striking a wave 4 low in October. As I mentioned before, this is valid as a 4th wave, which is why we've kept this on the chart here, this yellow potential, still going for a 5th wave higher. But at this point, it's rather unlikely, even within an ending diagonal, which we'd have to consider this, right, because our wave 4 overlaps into our wave 1 territory. This is still very deep as a retracement of the wave 3, and this is just too deep for this wave 4 to be reliable. And so once price broke below the June low, we moved to this count that considered that we have already struck a top. It's a little bit uncomfortable to consider this a top because this move off of the 2020 low does not count nicely as 5 waves into that high, but we have a potential 5 down. A waves can subdivide as 5-wave moves, so they typically are 3. And as such, we've been looking instead for just a 3-wave rally into resistance for a bigger B wave before heading down much lower, back to maybe the 3000 region or below, in the green C of the bigger primary A. The yellow count to higher high is still valid, but we are considering it the alternative potential for the reasons I mentioned, that this is just too deep and too wide of a wave 4 to be reliable as a wave 4 within this structure off of the 2020 low. With that, we'll take a look at the move off of the October low of last year. So again, what we were looking for was a bigger ABC up to resistance in the 0.500 to 0.764 retracement. That's what we typically look for a B wave, but again, B waves are quite variable. They can go beyond 100% retracements of the A wave, and occasionally we see B waves that are significantly more shallow than the 50%, but this is what we were setting out for, looking at 4150 plus in from October. And so as we were looking for a bigger 3-wave move, we're counting that as an ABC here. We have the capital A, B, and C for this bigger intermediate or parentheses B wave. And you can see here, Our initial A wave subdivides as a 3-wave move. We have an A, B, C up for the A, B wave down, and then 1, 2, 3, 4, and 5 waves up for the C wave of A. Then we have an A wave down, a B wave up, and 1, 2, 3, 4, 5 down for the C of B, of intermediate B. And what we've been looking for from there is a 5-wave move to complete this bigger C wave here. As Avi mentioned in the post today, when we're dealing with corrective structures, these 5-wave moves can tend to be a little bit less reliable. They're a little bit more subject to greater variability. So though we are looking for a C wave here, it is inside of a larger B wave, and that's context is key when you're dealing with Elliott Wave. It's sort of one of the great aspects of Elliott Wave is we do get market context for what we're looking for. So at this point, if we already get a higher high here, we're definitely looking at an ending diagonal for this C wave where we have a 1, 2, 3, 4, and 5. In terms of retrace support here, so this wave 4 has come very deep. When we look at the larger structure, the 1, 2 off of the low. So we have a wave 1 and wave 2. Price struck the 1.236 extension for the wave 3, and that is the standard target for 3 in a diagonal. From there, we really wanted to see 39.80 hold as support, as sort of the low end of support. That was the 0.382 extension. So this is our larger support for the wave 4 there. Price did briefly break below that today, but did rebound nicely from the early afternoon low. And so at this point, it's pretty key that we hold today's low for the prospect of getting a higher high here. Now, we do also still have the yellow count potential. That would favor, if we're tracking the yellow count, we still ideally can get one more high here, as that's what we're favoring in the micro count. But then rather than this completing a bigger B wave here and then heading down considerably lower in a C wave, as the green count portends. In the yellow count, we'd be looking for just a corrective retrace and then much higher to come as an ending diagonal here. And so it really depends, how price breaks down from any subsequent highs. So off of today's low, again, if we're going to get to this higher high, it's really pretty imperative at this point that today's low holds. Avi said he was willing to accept down to 39.50, but considering the bounce that we got, it's really pretty key at this point that price holds today's low. And we do have a nice, off of this B wave, we do have a nice 5-wave move into today's low that we can consider now at this point, where we can count this C wave down as a 1, 2, 3, 4, and 5-wave move into the low there. There we go. Okay. So what we're looking for now is a bigger parentheses ABC up to our target, which at this point is 42.30 to 43.30 for the 5th wave higher. And off of the low, we have a very good initial start. It's possible that this is just a smaller A of A of A. So that means we're looking for something like this. Okay, so we have our AB pullback. We have our A wave up. We have our B wave pullback, ideally developing here. It's possible that our A extends a little bit further. Should really take a look at an ES chart here. So off of today's low, I'm going to zoom out here for a second. Apologies for the noise here. I'm in an alternative office for today, and it's a little bit noisy. So I apologize for that. If you're getting any background noise here, please just disregard that. Okay, so when we're looking at the ES, ideally we've bottomed here in the wave 4, And if our initial A has topped, and we're looking at a B wave here, our overnight retrace support is here in the 39.95 to 4008 region. But again, we can still see an extension up. I want to see price below this little local low here to indicate that we've topped. So 4011. If we get below 4011, that would indicate likely that the A wave is topped and price is coming down in the B wave here, and then we can head up tomorrow in a C wave. At a larger degree, we're looking for something like this to develop here. We'd like to see an A, B, and C develop to take price back up, ideally to the early February highs here just for the A wave, and then get a BC into sometime into probably early to mid-March there. As Avi mentioned, though price did get deeper than ideal here, we did want to give this some leeway, especially considering we really have what can only count as 3 waves up off of the December low, off of this B wave. And though it's possible to strike a top as a 3-wave rally, a 3-wave decline, and then another 3-wave rally, those are referred to as WXYs. The great majority of the time, we do see a 5-wave move for the C wave here. And so, we have given this, a chance. And as Avi also mentioned, we had a substantial divergence developing today in the MACD at the lows. What I mean by that is that you can see the low on the hourly was struck earlier this week in the MACD, and price made a lower low today, but a much higher low in the MACD, and that's what we call a positively divergent low. So in any case, that's it for today's analysis. Are there any questions that I can answer here regarding the S&P 500 chart or the nightly market update? Okay, question. I find it confusing that a classic diagonal has a wave 4 dip below the top of wave 1 as the October low, and the recent low do. Yet if the retrace is greater than 0.61, then 0.618, we are on high alert. So just when one has confirmation that the account is a diagonal, we are cautioned the account may be wrong. The count may be wrong. Also, how easy is it mathematically for a diagonal wave 4 crossing the top of wave 1 to retrace less than 0.618%? So it really depends. It's a really good question, by the way. Thank you for this, Ernest. And it really depends on the depth of the wave 2. So typically what we're dealing with in a diagonal is a deeper wave 2, and that allows for, so in this case, for example, price came down to the 50% retracement. But let's say for our wave 2 here, but let's say instead it came down to, between the 0.618 and 0.764. In that case, then we would have been looking for a high here at 4150, and we could have overlap between our overlap would have occurred around the 50% retracement rather than the 618. So this question really depends on the wave 2. When we have a relatively shallow wave 2 for a diagonal, what it means then is that overlap between wave 1 and wave 4 may entail a deeper wave 4. Typically what we want to see for a diagonal 2, this is not so based in Elliott Wave, but you want to see, you'd prefer not to see too much of an expanding ending diagonal here. And so this is clearly expanding in terms of the wave structure here, where we would have liked to see a diagonal that's probably something more like this here, a little overthrow below and then back up. But in this case, we have a deeper 4. So again, this is pretty deep. I covered some of the other charts last night in the Beginner Circle weekly webinar. We won't take a look at those now, but I will mention that the Russell and the NASDAQ are counting much better in terms of the depth of their pullback. The NASDAQ in particular makes a good argument for getting a higher high, but this is certainly pretty deep here in terms of this pullback. And again, because of the retracement levels here. So yeah, our 618 would have just been about overlap. In this case, we got between the 618 and the 764. So this is acceptable here, but it's a little bit deeper than ideal to maintain a really, high confidence that we're getting this higher high. So I hope that answers your question as far as some of the nuances, Ernest. How likely is it for the SPX to cross over 4,400? Well, I suppose you mean in the near term time frame, not in the next 100 years. If you're asking about the next 100 years, I would say it's probably pretty likely. If you're asking within 2023, I wouldn't say that I necessarily have a I can't say that there's any strongly confident perspective that we'll get up that high here. Given what we're tracking as the primary perspective, I think it's unlikely that we get considerably higher than 43.30, but again, wouldn't rule something like that out. And again, if we're in the alternative perspective here, in the yellow count, then it becomes extremely likely. And so, assuming we get this higher high up to 42.30 to 43.30, what's pivotal then at that point is how do we decline? If we get a 5-wave decline, like so, I'll draw this out here. If we get something like 1, 2, 3, 4, and 5 down, if we get something like that, that then is going to favor very much so that would be aligned with the green count. Considering then that we have a much higher degree top in place. If, however, we get something like this as an ABC for a wave 2, a clear 3-wave move like a flat or something like that, that then leaves us open for going much higher here. But I don't think that playing for 4,400 ideally we're starting a rally from today's low. I don't think that playing for 4,400 from today's low is very prudent. So, okay, I think that answers that. Any other questions? Okay, that appears to be it for today. So thank you everybody for attending. Wish you good luck in your trading for the rest of the week. Again, just going to reiterate this here, that our retrace support for overnight. Let's go back to the futures chart. And our micro support here right now, based on the current high, is 39.95 to 4,008, and it's reasonably likely that we have a top in of sorts here, and pulling back. So yeah, so that's our key support overnight. Losing 39.87 becomes likely then that we will test today's low. It's possible still to consider a wave 4 below today's low, but really that's really stretched at that point. So it's really pretty important that today's low holds, as mentioned, and that's our support for overnight, 39.95 to 4,008. So good luck in your trading, and we will see you back on Monday. Thank you so much.